Japanese carmakers see little relief from U.S. trade deal. Despite a new trade agreement between Japan and the United States that promises to lower auto tariffs, major Japanese car manufacturers remain cautious about its financial benefits. The deal, announced last month, reduces U.S. tariffs on imported cars and auto parts from 27.5% to 15%. While that's a notable cut, it's still 6 times higher than the rate Japanese automakers like Toyota, Honda, and Nissan faced earlier this year. Adding to the uncertainty, the new tariff rates have yet to take effect, and there's no clear timeline for implementation. Toyota, the world's largest carmaker, has lowered its annual profit forecast by $4.1 billion, citing a $9.5 billion impact from tariffs. Honda expects a $3 billion hit to its operating profit this year, even after revising its estimate downward by $1.4 billion. Nissan also predicts a $2 billion loss due to tariffs. "We still don't know when the new tariff rules will actually kick in," said Nissan CEO Ivan Espinosa. Economist Richard Katz noted the frustration in Japan, saying, "It's like being told both your legs will be cut off, but they only take one. Are we supposed to be grateful?" The high tariffs remain a serious challenge for Japan, whose economy relies heavily on auto exports to the U.S. While major automakers may have the resources to absorb the extra costs, smaller companies with tighter profit margins are far more vulnerable. There are also concerns that larger firms may slow wage growth due to reduced profits. That could hurt consumer spending and complicate Japan's efforts to manage inflation and interest rates. Political pressure is growing on Japanese Prime Minister Shigeru Ishiba, especially after his party suffered losses in recent elections. Critics say the government failed to secure a written agreement with the U.S. specifying when the lower tariffs would take effect. 15% is better than 25%, but it's still a step backward, said Taro Kono, a member of Japan's ruling Liberal Democratic Party. Experts also question whether the 15% tariff will stay in place. The deal gives the U.S. authority to review the agreement every 3 months and potentially restore higher tariffs if Japan doesn't meet American demands. As part of the agreement, Japan has pledged to invest heavily in the U.S. and open its market further to American cars. But analysts remain skeptical that regulatory changes will lead to significantly more U.S. vehicle sales in Japan. "Big companies can afford to invest in the U.S., but smaller suppliers may not survive," said Sanshiro Fukao, an auto industry analyst. "This deal isn't the end. It's just the beginning."